today I want to talk about simplifying your trades and understanding the basics and going aligned with the basics. A lot of people are going into like deep things without considering the real simple things. I will make an example real quick. Always know, I'm talking about this every video because I think it's important. I'm always say this, but it really is, and a lot of people don't get it. The point is that the market always moves impulsive correction, right? Impulsive correction. And then there will be, at some point, there will be a reversal where you have something like this, going like this, and then something like this, right? And a lot of people are trying to catch this reversal. But why are we trying to catch the reversal if you're not even profitable? Why can't we just go with the trend? We know impulsive move here, catch the retracement. In low time frame, you can see a sweep or something like this. And then here, if you want to catch a reversal, don't catch it like this that you want to enter here. You wait for it to make a new low or a new high, and then go back and catch the retracement here. To quickly introduce my partner, my flash funding, I'm not just saying this because they're my partner. I really like this prop firm and I think it will be one of the biggest in the future. They have such a small profit target by just 6%, which is easily obtained by just two 1 to 3 risk reward trades. And if you want to get yourself an account, this is my code. Link is in the description. And let's go into the video. You should be catching this and this, not these, not these. Don't only focus on these points, okay? So this is the first thing. What you could also do is, if you have a consolidation like this, right? Most of the time around the volume area, we see impulsive move out of this consolidation, indicating that we want to go out of this range. Then here you are catching this thing again, same thing here. So it's this thing again, and you're catching this, which is all right? Always try to take those. I can show you an example of what I did. Here, okay, we see we had a consolidation right here, like all this range here. This was a consolidation, impulsive move out of this consolidation, a really small retracement, but I knew it was a small retracement because we have the weekly open, daily open, the volume area right here as well. I think I moved it later, but I had my SL above this volume area, right? And now I just went for the next like low or next liquidity that I saw, which was here, and we had the same thing again, going down, retracement, going down, retracement. Here it changed, but that's why we're only catching the first retracement. This was the first retracement, and you have to consider this, okay? If you, for example, try to catch a reversal here, you had an impulsive move going out of this, and you're saying, oh, it took this liquidity. Yes, it took this liquidity, and it also reacts to this liquidity, but then we had such a big fair value gap here. We have the volume area, we have so much things that are in the way. Most of the time, if it goes out of the consolidation like this, in low time frame, it can be an AMD model with like accumulation, manipulation, distribution, but most of the time, if you have such an impulsive move, it will create a fair value gap, and if it doesn't go through the fair value gap, which would be a BPR, then you can trade it the other way, which I also don't like, but this would be more like better. But if you go out of such a consolidation and there's so much in the way, I wouldn't take it like this. I would just trade like it's the beginning of an impulsive trend to the downside, and that's why you're trying to catch it like that. Let's see if I see another example. Yeah, here. After this perfect example, actually, let me clean up real quick. That's what I'm talking about. We had the consolidation here, impulsive move, retracement, impulsive move. So now we actually had like the turn. That's why I only want to catch the first retracement. Then we turn here. This is not the like it didn't break this high yet. That's why I don't consider this a good entry. But then we have the impulsive move breaking this high, breaking to the fair value gap, making it a mitigated fair value gap, so it's not valid anymore or not as valid anymore. Same thing again. We have the retracement. You could even take like Fibonacci right there. It's below the 50% mark with the weekly open matching, and you could take this. Obviously, this was news probably. It was news. But still, if it wasn't news, I would take it like this. And what do we aim for? Next volume area here. So we could have entered here if we see like confirmations, right? Make our stop loss below the golden zone somewhere, maybe here. Oops. And then we aim for the volume area, which would be here, right? Oops. And we have another good trade. I don't know why colors are not normal here. And we have another good trade because we are considering the simple facts, and it's most of the time even more important in higher time frames. Obviously, there are some times where market is just kind of weird moving. Like, it's normal in UJ that market's kind of weird, but here we see same thing again. It's going down, it's kind of slowing down, and then we have an impulsive up move going down here. This was the retracement, and now we're just looking for buys here, and then that's kind of it. Let me see if I go in GU. I lost this trade, which happens. Made the same thing again. We had impulsive move away from it, but then we made a break of structure, so this AMD model actually worked. After that, we have a correction once again. This was the correction that I wanted to catch. I should have maybe made it like here, my Fibonacci, and made more breathing room, so we also considered this volume area right there. But I wanted to catch the correction into the yearly open, which didn't happen. Maybe it happens now. I just should have thought about that there's a volume area that we should consider, and also that I put my Fibonacci right there. But overall, I'm doing the same thing again, but I just journal it and learn from my mistakes, right? But we see here it went down, made a bearish structure, so now I'm looking for buys because I want to catch the correction right there. I'm combining it with weekly open, daily open, volume area, and I aim for the yearly open, which would be here, which also would make sense if we actually take our like unknown English. It's, you know what it is, but I don't know the English word. I'm from Germany. But we can see that this impulsive move made around, or let's actually say it from here because this is the start, kind of. This impulsive move made around about 116 pips, right? So if it goes back down here, I'm thinking about that it's probably going to do something similar. I entered here, so here it would make even more sense. Same thing again, it's nearly 100 pips, it's 90 pips, right? But you get the point. It would make sense because the trend normally always moves kind of the same, or not kind of the same, but like the same pips, right? So here, up, down, up, down. It kind of always tries to do the same pips, and that's why people also trade trend lines because it's doing the same pips, and it made like a bounce from here. It's always doing the same pips. That's why if you have a thing or you have like a goal where it want to go, like a TP, you always want to see if it actually would make sense as well. That's something that I do for myself, and it's something simple you can add and simple foundation because some people trade based off that. So you can just adjust your TP or add on to your strategy. If it would make sense, you can just add it, you know? So that's why I did that. And yeah, this was the video. I hope it was helpful. If you have any questions, you can just ask me in the comment section or join my Discord. I'm also on there every day. If you ping me, I will answer anything. And yeah, see you next time. Bye bye.